Hello, I'm John Brachle, co-manager of the JPMorgan U.S. Smaller Companies Investment Trust, which invests in the heart of America. The S&P 500 is made up of 500 of the largest companies in the world. And on average, those companies tend to generate a third of their revenue outside of the US. If you look at the Russell 2000, which is a proxy for the US small cap market, there are 2,000 companies, and on average, they generate 80% of their revenue from inside of the US. So we think investing in US small caps really is investing in the heart of America. And not only that, investing in small caps gives investors interesting opportunities to invest in unique market niches and in business drivers that tend to be, less exposed to global events. And, it does tend to be the large caps that get the attention of Wall Street analysts and of the media. But, we think that provides really nice opportunities for stock picking within small caps because they tend to be more underfollowed. So we're bottoms-up investors. We don't look to make macro calls or chase short-term themes or trends. We seek to own high-quality companies run by really good management teams, and we like to pay attractive prices for those companies. We have a dedicated research team, and we use a generalist sector coverage model, which means each analyst can spend their time on whatever part of their coverage universe they see the most value in at a given point in time. And in terms of how we go about finding new ideas to invest in, there are a number of different ways. One of those is company meetings and company conferences. I think on average, between the five of us, we meet one company per day throughout the year, including names that we own and names that we're interested in. Also quantitative screens. We screen for things like profit margins, balance sheet, valuation. We especially emphasize profit margins just given we think that says a lot about the durability of a company's competitive advantage. And in general, we like to be really disciplined on what we pay for things. We like to have multiple valuation signals at once before we'll initiate on a name. And we seek to own these companies for a really long time. I think we have several in the fund that we've owned for 5 years and even some for 10 years. So I think quality shows up in the companies that we invest in a number of ways. Number one, it's the strength of cash flow generation. And that comes from investing in companies with really high profit margins, which is typically a function of a really strong competitive position and pricing power, and also low capital intensity. So it doesn't take a lot of asset investment to generate those cash flows. Number two, the durability of those cash flows. So we like to invest in companies with a high degree of recurring revenue or predictable demand, tends to be products that are mission critical for their customers or that are non-discretionary in nature. And number three, we like to invest in management teams that are good stewards of those cash flows. Great company doesn't necessarily mean great investment. We do pay a lot of attention to what we pay for things, and that results in a lot of valuation discipline and patience in terms of when we go about initiating on a new company. Well, over the long term, small cap returns have outpaced mid caps and large caps. And I think the starting point today for small caps is quite compelling, especially relative to large caps. Small caps have underperformed large caps for 7 straight years, and today comprise just a little bit over 4% of the total US equity market capitalization, versus 7% historically. And from a valuation perspective, small caps have historically traded at a premium to large caps. Today, they trade at the widest discount in over 20 years. So there's reason that small caps have underperformed, especially in the near term. Small caps tend to be a more economically sensitive asset class within equities, and obviously there are a lot of macro concerns percolating at the moment. So there is potential for small caps to continue to struggle in the near term, but over the long term, we think this is a great entry point for patient long-term investors. Our team has worked together on this investment trust for a really long time. Co-managers Don San Jose, Dan Purcella, and I have spent the majority of our careers on this investment trust and investing in US small caps. And, I often get asked, by some of our investors, what is it that makes you different? And my response is always, it's the discipline to our investment process. We really do what we say we're going to do. It shows up in what the portfolio looks like and how it performs in various market environments. So I think what our investors should expect is a portfolio with defensive attributes.